Welcome back. You're watching Money, 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 and this week we are decoding the fine print of the budget. And yes, there are quite a few hits that we seem to be going over. One is, of course, the higher surcharge and its impact on capital gains. The other, and this was also, sort of tucked in somewhere in the nitty-gritties, in the details, is an increase in TDS on your life insurance policies. Now, how is this going to really play out? Whom does it impact? Let's get some thoughts in. Sanjeev Bajaj, VC and MD of Bajaj Capital, is with us on the phone line from New Delhi. Sanjeev, thanks for joining in. The devil is always in the detail, right? And 1, 2, 3 days later, we realize that the hits keep coming. Now, explain this whole TDS concept to us, and how will it work on life insurance policies?
Yeah, what is going to happen now is that earlier there are two types of policies. One which are tax-free, which come under 1010D, where the sum assured is more than 10 times of the premium that you are paying. That policies will continue to remain tax-free, thankfully. But there are policies which are taxable, where, especially in case of single premiums, or where the life cover is not 10 times the of the premium that you are paying. In those policies now, 5% of the net gain is going to get taxed. Earlier, what was happening was that there was a TDS deduction of 1% of the total amount. Now they have clarified, rather than the total amount, it is going to be 5% of the net gain. So, which is slightly, the only positive in that is that 5% is high, but the only positive in that is that they have clarified that only the gain will be taxed, and TDS is only being cut on the gain. Earlier, what was happening in case of these policies like single premium, where 1010D cover condition was not met of 10 times cover, sometimes the whole maturity proceeds used to be treated as income. At least that is not going to happen now.
Okay.
But for an investor or a policy holder, he has to be very clear that when you are buying a life insurance policy, please look at the sum insured, and it is your duty to ensure that it is at least 10 times of the premium that you are paying. Otherwise, it won't be tax-free for you.
Okay, Sanjeev, so that's the first very important point that I think we need to keep in mind, that if you're going in for life insurance, make sure that your sum assured is at least 10 times of the premium that you're paying, because otherwise there's a tax implication. Sanjeev, is there any distinction between term plans or market-linked policies or ULIPs, or is it applicable to any life insurance policy which doesn't offer 10 times the premium?
No, see, term plan is only pure protection. So in case it is not applicable on term plan, but in case of whether it is any investment-based policy, whether it is unit-linked or traditional plan, it is going to be applicable on all the plans which don't meet the 1010D condition, which is 10 times the life cover. Okay,
so at least term plans have been spared. That's one good news. Now, if you could just illustrate this via a small example, let's say there is a market-linked policy, or even if it's a traditional plan, where the sum assured is not 10 times the premium, then what part of it will actually sort of be taxed? If you could just illustrate it with a simple example.
Yeah, so a lot of people buy a single premium policy to save tax under Section 80C. So suppose you have bought a 1 lakh policy. Earlier, what used to happen, maturity was 1,40,000 after 5 years. So they would keep 1% of 1,40,000 as a TDS, since the 10-time cover condition was not met. Now what they have clarified that they will keep 5% of 40,000 rupees, which is the net gain, which is the total amount returned minus the premium paid. And 5% of that amount will be kept as a TDS till you file your returns to show that you are not taxable, or so it's going to become slightly more tedious, to get your money back.
Okay, all right, Sanjeev. Thanks for explaining that to us. Really appreciate it. So that's something that perhaps one will have to keep in mind while taking a decision on life insurance as well. Many thanks, Sanjeev, for joining in and talking to us about this. Preeti, you want to comment on this, because this also somewhere in the fine print, this is also a bit of a issue that's coming up. And again, going back to the point, tax is going to become a determining factor in terms of the kind of policies also perhaps that you need to buy.
Right. But, I look at it more in terms of clarity, because this was an issue that a lot of people were facing, when they would get their sum assured. If it exceeded rupees 1 lakh, which is the threshold mentioned for receipts from life insurance, and if it exceeded rupees 1 lakh, you were subject to 1% TDS. Now, the TDS rate is 5%. But TDS is simply a monitoring mechanism. It only means now that the government knows that you've received some money which has to be your taxable income. The TDS amount will go up, but if you look at the approach, it's a lot of clarity. It's a relief for people who were getting money from their life insurance and then ended up having a much higher TDS in terms of value. So this is actually a positive move.
Okay, fair enough. That's on insurance. Another asset class where at least there's some good news, because we didn't have too many pieces of good news in this budget, right, Ashish, was on housing, at least on affordable housing. So the the deduction that you can claim on the interest, that goes up from 2 lakhs to 3.5 lakhs now. Right. But do you think this will really sort of find takers? Does it really sort of help people?
So they've introduced a new section whereby people who buy the first time purchase of a house up to 45 lakhs can avail of an additional deduction of 1.5 lakhs in the interest of housing loan. So the total deduction that you can get on the interest is about 3.5 lakhs. The concern here is that I don't know whether anybody can utilize this entire limit, because let's assume you buy a 45 lakh house and utilize the entire limit, and even if you take a 90% LTV from a bank, you end up taking a loan of, let's say, about 39 lakhs. Now the interest component on that, I don't see it reaching 3.5 lakhs per annum.
Okay, so it's a bit of a wasted sort of increase there.
Absolutely, but I think given the state of the real estate sector, I think any relief is welcome, and I think most developers will take it. It is also applicable more for tier 2, tier 3 towns, because I don't see, in Bombay, someone being able to...
Buying a house for 45 lakhs. I don't think it's really happening.
Yeah, absolutely.
Preeti, just to clarify this, and this is a query that kind of came up from one of our viewers as well. Now, if someone wants to, let's say, invest in an affordable house and then avail this provision, you can buy a house for 35 lakhs, and then you want to avail of this higher deduction, but the individual himself or herself is still living in a rented property, in Bombay. So I don't know how you can sort of get around the provisions. Can you claim both HRA benefit and also this higher deduction?
Absolutely, you can do that. The condition here is that this is the first time that you would be owning a house. When you're taking this loan, you should not be owner of any house property. Now, if you're claiming an HRA, the HRA is actually linked to, if you're staying near to your workplace, you have to be closer to where you live, and that's why you need to take a rented accommodation. That makes you eligible for HRA. And when you're taking a housing loan, that has a separate set of conditions. So if you take up this housing loan, definitely you'll be able to claim the interest deduction. And on top of it, because you're living in a rented accommodation, because of staying closer to your workplace or being in the same city as your workplace, you will be eligible to claim HRA. And on the affordable housing, I would like to add that they've also added another section, which is 80 IBA. They've extended that to the builders, where they'll be able to claim tax relief, they'll be able to claim deductions for building this affordable housing. So it's both ways. It's also for the investors. They may not be able to fully exhaust the 3.5 lakh limits, but it's also an encouragement to the builders. So they'll be able to claim a deduction when they develop affordable housing.
Okay, there you go. So you can perhaps look at a house in tier 2, tier 3. If you're in Mumbai, small chance of finding a house in 45 lakhs. But maybe if you're looking at tier 2, tier 3, then there could be an avenue opening up there. We need to take a break. On the other side, some more takeaways from the budget, including this interoperability between PAN, your PAN number, as well as your Aadhaar card. We'll talk about that on the other side.